Hello and welcome to this Tier Markets daily commentary for the 11th of February 2020. Coronavirus developments continue to make the major headlines and none of them are good. They range from the uncertain to the downright scary, and at this point it's a case of hoping we never get to the point of global panic, although one expert suggested that if containment doesn't work, 60% of the world's population could become affected. Let's not go there today, and instead we will focus on some economic data as well as several testimony from key central bankers. First up, some bit of an expected Q4 GDP data out of the UK. This was tempered by some weaker than expected industrial and manufacturing production numbers. Overall, the market was happy to focus on the positives, and sterling would rally from 129 to a high of 129.68. Despite Aussie lingering just above 10-year lows and the economy's obvious exposure to China, bargain hunters emerged once more, taking the Aussie from 66.80 up to 67.36. CAD would also show strength, taking dollar CAD from 133.20 down to a low of 132.77. Euro would await testimony from ECB's Lagarde. She noted growth in the euro area had been slowing since early 2018, and inflation was still well below targets. Euro dollar would take a drop from 109.15 to a low of 108.91, just shy of major support at 108.80. We then got a bounce up to 109.25, which felt as much like short covering as anything else. Next up, Bank of England Chairman Carney, and his main point was that interest rates would be relatively low for the foreseeable future. This is not exactly new news, but enough to take the gloss off the earlier rally in the pound, and we saw it slip back to a low of 129.30 before bouncing a little towards the New York close back to 129.55. Finally, the beginning of Fed Chair Powell's testimony, which will be spread over 2 days. Other than addressing the coronavirus issue, his comments were largely positive, noting there is no reason for current expansion not to continue. US equities would use those comments to follow the earlier gains in Europe, with the Dow Jones up as much as 130 points at its best levels. But by the European close, much of those gains were gone in the Dow, although the S&P and Nasdaq both remained higher by over 0.4%. The US afternoon would drift into a slumber. FX barely moved, with euro dollar unable to break 109.25. Equity markets slowly gave back the gains, and by the New York close, all three major indices barely registered a plus for the day. A day that started with much promise ended up being a damp squid. Hopefully tomorrow we get a few more fireworks. Turning to a little technical analysis, up in front of us here we have an hourly cable chart, sterling dollar for those of you that haven't heard me call it cable before, and on there we also have a 100-hour moving average in orange. Sterling was the one moving today. I figured it was a good idea just to take a quick look at it. Looking back at some recent price action, we can see this average here has provided some support and resistance, but has also acted as a pivot with some sharp momentum when broken. And we can see here, we've got a clean break here, a very sharp move back above here, acted as really good support here. And then again, we break, does break above a little bit there. Then again, down through here, we see very sharp momentum up, back down, sharp momentum, acted as really good resistance here, stayed below all the way down. And then today we've had this break higher back above it. It's certainly not a perfect science, and for once I'm not highlighting any particular levels, but today has seen this break above. And although we did have a brief dip back below just here at the European close, it held and we've closed higher. After the recent fall from above 132, the question is, has momentum turned for sterling? We shall see, but it's definitely worth keeping an eye on over the next couple of sessions. Hope you all had a good day and look forward to speaking with you soon. Cheers.